that moving averages are statistical calculations used in data analysis to show fluctuations in the market. When we talk about fluctuations, basically we are talking about upward and downward movement of the market. Fluctuations in the market, they are commonly used financial tools in all markets. And basically, there are two types of of uh, of moving averages. There are two types of moving averages that we basically have, and these two types, they are the ones that we are going to discuss a little bit more today, so that anyone could have a better picture of the use of the past history, because our technical analysis is using past data to predict how the future would look like. But remember, sometimes we get affected by non-controllable factors. I have no problem with anyone writing on my screen. The only challenge will happen is when you do it so many times. That leaves to be a personal decision, and it gets to a level of something you are doing intentionally. And so I would request that when you join, you make sure you don't notate on the screen. But if it happens, it's okay. But please do not overdo it, because it might be affecting one or two factors here. Okay, so let's now dive into basically, we find ourselves that it's not happening. I don't know why. Okay, I will ignore the writing and then we continue. I will ignore the writing and then we continue. Let us continue here without the writing. I hope it will be okay with anyone. We continue here without the writing. I don't know why things are not moving, but these are network issues that I don't control. So I will not write. I will just keep sharing the information as I've been sharing it, because it seems things are not moving my way. Okay, if you can hear me, give me one in the chat. I'm gonna ignore the whiteboard because it seems things are not moving my way when it comes to the network. But I will still strive to see that I win, but sometimes you see when things don't move your way, it is not good. But okay, we get moving. We have what we call simple moving averages, and we also have what we call exponential moving averages. And we would love to explain what simple moving averages are, and at the same time, we'd love to explain what exponential moving averages are. Simple moving average, it calculates an average of set number of data points over a specific period. When we talk about moving averages, ladies and gentlemen listening to me today, we are talking about the ability and the power for this indicator to look at an average performance of these candles. Maybe we say 7 candles. What is their average performance? Let me say 10 candles. What is their average performance? And that's what simple moving averages do. So the formula for simple moving average, it is the sum of prices over the period divided by the period. Let me see if this works. You know, I'm this kind of a person who never gives up. Okay, let's now go into a simple. Then we have exponential moving averages. Exponential moving averages place more weight on the recent data points, make it more responsive to the current price changes, and it assigns and decreases the weight of the older data. So the formula for the exponential moving average is the current price. But now I don't want to go into how these are developed because I see I might cause a lot of confusion. But basically, the simple moving averages, they look at past data, okay? The moving averages, they look at an average price, basically for past data. But the exponential moving averages, they use both past data and present data. I think that could give a better understanding. Let me see if I will now be able to write, okay? So basically, you're going to find that we have what we call moving averages. And they are divided into 2: simple moving averages and exponential moving averages. The exponential moving averages or the simple moving averages is the total sum of prices. So they look at prices, let me say, for 7 days. What is the total sum of this coin, of this candle, of this coin for the 7 days? And they divide this by 7 days. What they get is what we could call where this line will be moving at that price. But then when it comes to exponential moving average, this looks at more data. It will look at the past plus the present. So it will be the current price plus the previous price for a given period of time. So I would say that exponential moving averages are more stronger. In simple terms, without confusing anyone, I will not go to the mathematics, is the present data plus the past data. And so whenever someone uses the exponential moving averages, he gets better information than when someone uses the simple moving averages. But let's try to go to, I'll keep it to that. I don't feel it would be okay for me to cause more confusion more than that. But I believe when I do that, maybe maybe someone will be able to. So we have two types, like I've said. The exponential moving averages, they look at past data and present data. The past and the present data of the market. And when we go back to our tier, the trend, the area of focus, and the execution point. We find that these indicators we are going to discuss are too important when it comes to the trend of the market. They define an uptrend and they define a downtrend. And there is one indicator that you can even use. It could be even a standalone indicator that you can use. I know a friend of mine who's very good at using that indicator, and it makes for him a lot of money. Now, there are strategies that can be used to create exponential moving averages, or what we could call simple moving average. And these are just multipliers. Someone may decide to create a multiplier of the exponential moving average. Let me say a multiplier of 5. So someone uses a multiplier of 5 and says, my first indicator will look at 5 days. The next one will look at 10 days. The next one will look at 15. Then another may decide to use multiples of 10. He uses at 10 candles, 20 candles, 30 candles. This is short term. You want to look at the short term. And here you are looking at long term. And what happens is that when someone creates this, it means there are usually 3. Can use 3, so these will be the 3 lines that are moving. And what happens when they are moving and they meet? When they meet, after their meeting point, they spread. And if they were moving below the candle, or they were moving above, and they meet below, when they spread, this is where you make your entry. Okay? And even if they are moving above the candles, and now they meet at this point, you'll find that they will now spread going down and the market will dip so much. And here, when you see it and you are in that coin, just things have changed and you are going to get concentrated floating loss. Another person may decide to develop a strategy and look at a bigger range. Okay, a bigger range of, let me say, 20, uses 10, then it goes to 30, then it goes to 50. Bigger time. Bigger time. And these exponential moving averages, they really predict market direction. So let's now just go to the chart. So that we keep this simple. Let us just go to the chart. So in simple terms, I would be able to say that the simple moving average, they will always provide equal weight data. They will just look at the overall performance of the whole market. But exponential moving averages, they will look at recent and present and give you concentrated information. So let's now get into this chart and look at there's a very good trade. Okay, here there is a lot of confusion. There are so many indicators, but I'll first keep those I've taught for now. Those that I have not taught, I'll remove them. Not because that I will not teach them. If you look at this tool here, when you try to do your technical analysis, you could see that the market is responding to this area. Give me one in the chart if you can see that the market is responding to these higher highs here to be its new support here. Give me one in the chart if you can see this. Now, what do you want me to repeat? I don't see anything I need to repeat. So you could see that the market is trying to respond there. On Friday, I request all people to attend the morning training on Friday this week. Not this one, but the other training. Okay, let me get back to this token. Although I see app is getting better and ready. I hope you see the market is trying to respect that area, but that's not why we are here today. Okay, so we are going to come here on indicators and we are going to look for technicals, and then we are going to write in exponential moving averages. And exponential moving averages, or the moving average exponential, when you tap on it once, it will get in your screen. And like you see here, we shall come here and tap on the setting because it comes with a setting. Looking at previous 9 data days. So we are going to now extend this to a major moving average of 200. This moving average, if you can have it every time you trade, ladies and gentlemen, it will always predict the movement of the market. It looks at the previous 200 days, in short, that's what I would say. The performance, let me remove this thing of up, down. And when candles, I need to emphasize this indicator because I think it is the best I have ever made, the 200 exponential moving average. When candles are forming above it, my brother, my sister, you are on a sure deal. When candles let me increase its thickness, just I turn it to orange. Orange is one of my best colors. When candles are performing above, this coin is on an uptrend. When candles are forming below, this coin is on a downtrend. But when you find that candles are forming above a 200 moving average, this coin is on an uptrend. Give me one on the chart if that is clear. When candles are forming above, this coin is on an uptrend. When candles are forming below, this coin you are trading is on a downtrend. It is a crucial indicator to help you understand the trend of the market. And I'm trying to show you different coins in the 4-hour time frame because me, I usually want the 4-hour time frame. If candles are still closing above it and forming above it, this coin is on an uptrend. When candles are still closing below it, forming below it, this coin is on a downtrend. I'm using the 4-hour time frame. Give me a 2 in the chart that is clear. As simple as that. Now, there is a good combination. When we combine the 200 moving average, exponential moving average, when we combine the 200 exponential moving average, I've shown you different coins that I think could be enough. When we combine the 200 moving average with, like you see here, coin 1, but coin 2 things are not yet okay. Here, but coin 1 things are okay. If you check another coin is OM. I don't know, I haven't read about this coin so much. But you have got the difference. Now let's combine. And we add in another exponential moving average. And make a good combination. Now, I know there is a lot, but I'll focus on the basic. When we change the exponential moving average, we add on another one. It comes with a 9 looking up time clause. Then we change this input to a 20. So this is one of the best combination, combining a 20 moving average and a 200 moving average. And so we shall get here to the style, the color, we leave it at blue, and we change this thickness so that it could look a little bit thicker. Now I want everybody to look more closer. And this is what most traders look at, even when it comes to Bitcoin. Why do they predict an uptrend? Usually most traders predict an uptrend on BTC when they look at that crossover. It usually this was my technical analysis. Those of you who are following me closely, yesterday I told you I expect Bitcoin to come down. Yes, I still expect Bitcoin to come down. I haven't changed my words. But if you could see, I'm in the 4-hour time frame, so I will. Let's see. Okay, what you see is BTC in the 4-hour time frame. What you see is BTC in the 4-hour time frame on your screen. Usually, I would say indicators are not perfect, but I want you to imagine that at around this point, it's when BTC made a crossover. It was in October 2023. And BTC, when it formed this major crossover here, and the crossover is when the 20 moving average crossed a 200 moving average, and candles remained forming above the 20 moving average. Imagine if you knew about this. Where did I place now? Where did I place? Hey, hey. Anybody to guide? I don't remember. Eh? I wanted to get back my tools. I wanted to get back tools. Eh? Are you sure I will not get them back? Ah, let me see. I want to get my tools, but these things now, technology, what is not here. Okay, let me just close. Nobody is guiding. I'll just close this chat and open a new one. I don't see anybody with the solution. But I wanted to show you. What is this now? Now what is this? Hmm? Mhm. Okay. This is a new. Ah, now Zoom is not responding. I think that was the reason. I think the reason was network. The reason was not the. Fine. How are you? I think the reason was. But what I was trying to say, when you combine, mm, when you combine the exponential moving average with when you combine the exponential moving average as I wait for this thing to now it's taking close. It's taking a lot of time. But as I wait for this thing to I don't know why, but let me try again. Just a minute as I sort this out. But what I'm trying to talk about, uh, I'm back now. I'm back now. Mhm, 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 mhm. Someone told me I make it full screen. I will sort it later. But I cannot get my other tools I wanted to use. But I'll just keep teaching to this. Okay. Now, this crossover happened here on October 2023. And it happened when Bitcoin was at a price of around 27,000. And from then, it has been moving above the 200, but also above the 20 moving average until BTC went to $49,000. Then later, we see another crossover up here, then a little downward movement. Then we see another small crossover there because I'm in the 4-hour time frame. I wanted to change. Now you see the thing has jumped. I also don't know. Hmm? Hmm. The thing has jammed. Even me, I don't know what is happening. I don't know. Okay, I'll remove this one. Let me use this. Let me add new indicators here. Exponential, moving average, this one, then two. So some use three, then this I will change. The input here, I will make this a 200 moving average. Then I'll also tap on the setting, come on the style, the color, then the color is okay. Now this one, okay, is this one. Okay, then the thickness, so that is the 200 moving average. I will not stop on that. I will also add in another moving average, another exponential moving average. This is the best combination. I've not gone so much into creating the rainbow, but I believe I will. So I'll also tap on the settings, the color. One, I love blue and orange. You could have different colors of your choice. I don't want anybody to say. So what I usually do, I love my 200 moving average to be the one in orange and to have the most thickness. Then I love this one, the 20 moving average, to be in blue, but with the less thickness. I want it not to be as thick as the 200 moving average. Here it is fine. Then I'll put it up. So at the crossover, you can plan to make your entry. When the 20 moving average crosses the 200 moving average. I've told you when candles close and remain above a 200 moving average, that coin is on an uptrend. I could also go back to 1 day because the bigger the time frame, the bigger the impression. Imagine if you had traded this coin from this point and up to now, you were still enjoying this same coin. The crossover happened here. Imagine this coin has delivered over. If I stop here, but if I go to the highest point around them, you see that this coin has delivered over 221%. This one I didn't change. All right, thank you so much. I didn't change the input here. It remained a 9 moving average, but I want it to go to 20. But still, I think almost the same news. From the crossover here. So this could be a very good combination tool when you are trading a coin, and it gives you the interpretation, the trend of the market. And the 200 moving average usually gives that trend of the market. Who can see something big about to happen in Monero in the 1 day time frame? Anybody who can see that something big in the 1 day time frame is about to happen on the Monero? Monero is XMR. Anybody who can see? Anybody? Anybody who can reply? You can see something about to happen here? No one? No one can see. Am I on the call alone? Is there anyone who can see something big about to happen? This is in one day. So if we go to a lower time frame, like 4-hour time frame, can you see candles have started to form, one above the 200 moving average at the crossover here. But now they are forming above the 20 moving average. So it acts as a support. Now it is acting as a support. Now remember the trend of the market. Now you know the trend is an uptrend on Monero. Now you find your exit point. You enter from here and get out from here. Is that hard? If this is the current price, there is a bullish engulfing candlestick chart pattern. Can we all see that? Simple. Let me take you to 1 hour. It's acting as a support. So if you are good at to draw resistances, very clear to where you can make exits in the market. Never forget the tier, the trend of the market is very important, and that's where we have been putting our focus. Execution points, support and resistance, and areas of focus where we can use still support and resistance, but then we shall be able to bring in indicators like the Fibonacci, the relative strength index, the Bollinger Bands to make better decisions. Still, someone could decide to combine other indicators like it is in Royal Q. Royal Q combines a 99 moving average, a 7 simple moving average, and a 25. But to me, if someone wants to get a good trading experience, these two moving averages usually provide a better aspect on the trade. I would also love to share an indicator that has a combination of so many indicators. And here is the indicator. It is called Photophile's moving average exponential ribbon. I want to tap on it once. And I know it will drop into my screen. The name is here. Let me open it again. It is called 40 files. Let me add it the second time. The indicator is here. The indicator is here. It is called 4 files moving average exponential ribbon. Give me one in the chat if you have seen it, because that will be my last indicator for today. Okay. And then you tap on it once. I've not tapped on it. Now, this indicator let me open it. It has a 21 moving average, 21 candles, 25, 30, 35, 40, 45, 50, 55, and a 200 moving average. So it combines so many indicators at once. And When and how do we use it? When and how do we use it? When and how do we use it? Okay. So you could go ahead if you have interest on this indicator. Now this is its 200 moving average. I can highlight it. And when I highlight it, you find that, okay, let me tap on it. So this is its 200 moving average. Okay, let me also put it in orange. Sorry, in orange. It's not allowing. I think. Okay, when I put it in orange, you see it is the same color, like the one of ours. When I put it here, you see it is the same color. So this is the same. Even if I remove this one of mine, it will still remain there. It is moving. It is the same. It's a 200 moving average. The reason why you see my blue one still there, because in his combination, he starts from 21, but mine is a 20 moving average. So when you trade, this indicator forms what we call a rainbow. Now, you know people are emotional. A rainbow is just a combination of colors. Me, I don't want people, because I have a challenge these days, people are turning me political. I want to repeat my statement. Me, I'm here only for money. Other issues people are trying to bring in business are none of my business. I'm very clear, and I want to always remain very clear. Now, when these meet at this meeting point, understand that they are going to spread and the market will do amazingly well. When they meet and candles close above, like you see, the market will spread and they will do amazingly very well. This is from 20, 21, 25, 30, 35, 40, 45. Is using multiples of 5 here. 55. And when they close a 200 moving average, this confirms in your mind that this coin now has joined the uptrend mode. Now, when we go ahead, you could see when they meet above, like here. I don't know if you guys you can see. When they form their meetup like here, then understand this coin is going to go down. Now, the rainbow, or they have met here, what should we expect? Some answers in the chat. This is the 1 hour time frame. It is not a very good time frame to analyze the market. Top-down analysis. Let's use 1 day. Can you see? Does it bring out the picture to everybody very clear? Give me a yes to confirm. Does it bring out the picture now very clear? You could now interpret the trend of the market. Once forming below them, it's a downtrend. When they meet and candles close above it, then you know this coin is going to do amazing very well. These indicators help you to predict the trend of the market. Okay, I hope that is 1 day. This is 4 hours. I hope you could see, and this is 1 hour. Top-down analysis. They help you see a better picture of the market. And they are key and very important. They help you see a clear picture of the market. And then don't forget, you don't need only this to decide. These indicators, all of them are speaking one language. I don't know if I say that someone understands. All these indicators They are speaking one language. They only show the trend of the market, but they cannot be able, I don't know, to give you areas of exit. I told you the other time that for you to trade well, there is a coin I've opened. And it looked very nice. Is it this one? I don't know which one. Can you see it here at Neo? Anybody who can see in the 1 hour? But you don't need only these indicators that predict the trend of the market. You need others, which we are going to see. I think tomorrow we shall see momentum indicators. We shall do the Bollinger Band, then we go to momentum indicators, stochastic RSI, and you see what NEO is doing currently here. Never forget support and resistance. So if we go back to what we dealt with and we put in our pivot point standard, it not coming. Huh? And then we go ahead and change this to Fibonacci. The rest are okay. And press OK. Could you see where do you expect this point to head? Answers in the chart. We are in the 1 hour time frame. Where do we expect this point to head? Answers in the chart. We are now combining the moving averages plus the pivot points. Thank you to resistance 1. And that's where we expect to take our profit. Now, the coin cannot head on an uptrend, but we are getting the trend of the market. At the same time, we are using support and what? And resistance indicator. So we look at resistance 1. Good. So the bigger the time frame, the more the waiting time, the bigger the take profit. And that's a very good trade. We also looked at an indicator, but although now it may not be so key, and that was the ABCDV1. This coin has formed a lower low, which means it has formed a lowest trend in the market. Now, I'm not saying you combine all these at once, because unless you are having a paid version, I told you I'm just going to paste to teach, but me, I can still use the free version. The lower low has been formed. A red candle has closed above our pivot. A green candle has confirmed. Now we see a strong green candle. Even if we change the Harkinash candles, we said a market confirms an uptrend using the Harkinash candle when it forms a candle that is flat at the bottom with a wick at the top. Let's see it in 1 hour for a better interpretation. You see continuous formation of candles that are flat at the bottom with wicks at the top are there also. The candles are also trying to close above the 200 moving average, and that there is something to try to form where these so many indicators are meeting at once above our pivot point, and so we are going to resistance 1. You just need to be patient with your trade. You see the same combination. This is at F, but can you see the same stuff happening here on this coin called Radar? I also told you guys that why would it be not okay in 1 hour to trade Radar? Why do you think it could not be okay? in the 1 hour time frame to trade radar. Let me get these words. I wanted it to move. Okay. Why would you think it would not be okay? Anybody? In the 1 hour time frame for someone to trade radar? Anybody as I come to the end? Why do you think it would not be okay? In the 1 hour time frame to trade radar? Answers in the chat. Anybody? This is pivot point. No, this is pivot point. This is resistance 1. This is resistance 2. Somebody with the answer in the chat. Thank you. It is in the overbought area. I don't say it cannot deliver, it can, but it's in the overbought area. This was a pivot point. Resistance 1, resistance 2. It means the buyers have overbought this particular cryptocurrency. I don't say you can't trade it using support and resistance, you can. But once the buyers have overbought that specific trade, you see, if you compare Rada with NEO, which one is better? If you compare Rada with NEO, which one is better? Anybody in the chat? If you compare the two, which one is better? Okay, NEO is better. It has better trading experience for anyone. All right, guys. Thank you so much. You may combine two indicators, get direction of the market, remove one, add in another. If you don't have a paid version, you able to see with the pivot points, you see what is happening. Then you add the pivot points and the 200 moving averages and see what is happening. You can keep on alternating and changing different candlestick chart patterns respectively. Unless there is a question, but I believe I have shared enough for today. I think I have shared enough for today. Unless there is a question, I would love to answer. Unless there is a question.